really a possibility that they could even go beyond $25?
Well, they will price above the range, Betty. That's what we're hearing. And, you know, it got, to your point, a lot more expensive to buy Twitter yesterday, completely erasing the discount that we saw earlier in this process, discount to peers, especially Facebook. Remember, Twitter went out there saying that it was going to be conservative. Now it is actually more expensive on a price-to-sales ratio basis than Facebook is. So investors are paying a premium here. And just to put this into context, many IPOs, in fact, the majority of IPOs this year have not increased the range, despite the fact that we've had a very robust equity market and a very robust IPO market. So this just goes to show you another data point as evidence to show that how much euphoria there is out there, really.
Okay, so this euphoria, describe that for me, Christina. I mean, what is it exactly like?
Well, look, to a certain extent, Twitter has phenomenal timing when it comes to this IPO. If you look at what the equity markets have done, they're basically on pace to reach records. Not only that, but if you look at the Bloomberg IPO index, investors pushed that to a record yesterday. And so we see a lot of great momentum, and Twitter is going to take advantage of that. It seems like they don't want to leave that much money on the table for investors. So this is all, by the way, against a backdrop of a company that's still not profitable, and there is some questions about its ability to grow users at a rate that investors are really excited about.
And it is interesting, right, Christina, that people are willing to overlook the fact that this company makes no money right now and its growth is slowing.
Well, they're telling a pretty compelling story, right? They're saying that, you know, we've got mobile users, we've got advertising tied to mobile revenue. That is a big part of their story. Also, let's not forget, they're out there telling investors that they've got projections on margins that are going to increase over 70%. That's pretty impressive. But look, a part of this is looking at the numbers, but a large part of this is also emotional, right? Investors are really excited about this as a social media play, and they're willing to take the risk. And they are betting clearly that Twitter has the holy grail of merging content with advertising. Remember, if you can blur the lines, you can create some pretty compelling advertising that users are going to click on, and every time they click on it, Twitter gets paid.